What a douche. The more I hear about this Apple lawsuit, the more I just... It's overreach. Complete overreach. There we go. I think we're live. It is Friday, March 22nd. Just so you know. There I am. Now I'm live. Do, 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 do. Wah, wah, wah. Morning, Scott. Ooh, looky. Looky, it's Gary playing hooky. Wah. There we go. Okay. Let's go here. Good morning, Scott. Delete. I am busy. Here, I gotta turn this down. Okay, now we're silent. View channel. Vertical live streaming is here. Reach new viewers and be discovered in Shorts feed by going live vertically on mobile. Interesting. I can go vertically live on mobile. Lulu was I mean, here's the thing, Grayscale, about Lulu. I was wrong. I mean, you know, I did not play it. Yesterday was a nightmare of a day for me personally, but not a nightmare, just I was busy. But Lulu in the after hours, let's see, you are down 13% at 414, it looks like. I do think that 400, you can see right here, this 407. I don't know where that support came in. Let me see. That was the previous, like 2 earnings ago. You can see how it kind of bounced off there a couple of times. And then here, I think that you're going to play in this space because the earnings were not bad. Those earnings were just not crazy bad at all. Where is the summary of Lulu? Yeah, despite surpassing analyst expectations in Q4, Lululemon shares plummeted by approximately 13% in the release of its outlook. For the current quarter, which fell below the consensus forecast, the company anticipates Q1 revenue to range between $2.18 billion and $2.282 billion, below the consensus estimate of $2.26. Q1 earnings per share projection to be in the range of $2.35 to $2.40 versus the consensus of $2.53. For the full year, Lulu expects revenue of $10.7 below the consensus of $11 billion, and anticipates earnings per share of $14.1520 compared to the consensus of $14.26. That earnings per share between $14 and $15.20 still is above the consensus. So in my mind, Grayscale, this overreaction, you know, any market reaction is an overreaction. So if here, I'm going to, I put these in quite a while ago, and I said up here that this was probably going to be a resistance zone. It got above it, kind of pulled below it. My assumption is if you dollar cost average your way down here, then you might be okay. Here, let's go to an after hours. And let's go to a 5 minute. And you can see You've got no confirmation right now. So my guess is that you'll probably hit that 407, 400. I don't think you'll hit the 300s on this one. That would be a move that would probably just be not optimal. 417 pulls you below the 50-day. So you're at 414 right now. 411 is where the 50-day is. My guess is that's probably going to provide you some support between there and 407. You can see if we pull this back to its highs back here in November, where the stock was trading at about 480, 485. Look at where people are holding it, just about 400. I mean, it didn't build enough volume shelf up here to not get pulled down. I mean, that's part of the issue when you give bad guidance. Now, are they sandbagging it? I mean, that's, in my mind, that's the real question. Are they sandbagging it? Could be. Could be an interesting sandbag if you ask me. Looking at the pre-market stuff. And then we'll do some scans. Tesla's down at 166. I was at the morning mic. Reddit, I'm not even going to go over Reddit. 3 months. Reddit popped. And I said it yesterday. Reddit could be undervalued, and I thought it could pop to 60. And before it started trading, it did pop to 60. I think it could be worth 60. Let's see. Reddit is trading in pre-market at $49. I think you're going to see it pop back down to the 34. Company's not making money. They're, that's the problem, is it's not making money. I mean, look at how it traded on its first day. I mean, that's not positive to me. Tells me a lot of people sold at those highs. So, LULU, LULU, I do like this dip, and it's not because, oh my God, now it's perfectly valued, but the valuation here that was a D, and the difference between Abercrombie and all of those other ones that I mentioned yesterday, it was the guidance. I mean, they're just not going to grow. We can go and look at peers, and we can edit the symbols. We'll pull out Kering. We'll pull out this one, Ralph Lauren, Tapestry. We'll leave Adidas in. We'll put in Gap. We'll put in Abercrombie. We'll put in AEO, American Eagle Outfitters. And we'll put in Guess. I think it's GES. There we go. Okay. So this is kind of the comparison. And I thought it was going to be, look at LULU over 1 year, 60%. Are you upset? Well, Abercrombie and Finch is up 432%. It's not, LULU is luxury goods. These are apparel retail. In my mind, this is where you get to this. The valuation is D-. Everything else is good in the quant, except for that valuation. And you go down here, dividend grades. LULU doesn't have a dividend. This is where you get to the peg. And 2.36. It's high. I mean, that's forward. They're looking to grow, and you can see growth. I mean, they're growing at 23%. A&F is growing at 15%. AEO is growing at 5%. Guess is growing at 3% year over year. Forward, 20% revenue growth. EBITDA growth, 28%, but that's where A&F and Gap are blowing it away. American Eagle was undervalued. So, net income, gross margin, they're doing fine on gross margin. 1 month performance. I mean, they're not doing as well as ANF or AEO. It just, again, my guess on this one was it was going to be good. I screwed up. My apologies. I did not trade it. There were 2 reasons I didn't trade. A, I don't go into the mall to buy LULU. And B, I am the kind of guy that buys the LULU knockoff on Amazon. Buy what you want. And that's kind of where I'm at is, hey, I thought it was a good opportunity. Looks like it's a buy. The quant has it as a hold. And the quant hold rating, it's had it as a hold for a while. Even though it's crazy, the valuation is just what that gets it. Peg trailing 12 months, but peg forward, 2.36, sector median 1.58. So difference to sector, yeah, 2.4. So I don't know what to say other than, whoops. FedEx, though, killed it. And my notes are, let me see. I put my notes in. Biggest movers of the day. I was wrong about LULU. I was initially wrong about Nike, but they gave their forward guidance, and then it turned out that I was right about Nike. And I was right about FedEx. I ranked them yesterday. I said my first play would be LULU, my second play would be FedEx, and my third play would be Nike. I just didn't think Nike would have what it needed to beat Ulta. Let's see. Is this one coming back? I need to get over here and move this more over here. There we go. Okay, we're going to do some scans. It's now 8:44. Do you invest in this one? I mean, this has just been a monster. I mean, at 52, it got up here to 78. Morning, Daniel. Morning, Q. Let's go to the scans. Mind you, we're still in a bull market. I mean, do not let anything identify that we are not in a bull market, even though my year-to-date looks horrible, by the way. My year-to-date is just incredibly bad. Let me see. Okay. We're going to do scans. XLK. That's got to be on a current run, yeah. I mean, it's getting set up for another, I think, move upward, but who am I? I'm just a douche. I'm just a douche. QCLN. IGM, CRM, CrowdStrike has a cross up. That's on a run. I mean, that's got to be not new. This is trading sideways, getting ready for. Oh, you know what? I do want to look at. I want to do this before I go on air. Yeah, I'm not worried about it. It just, when you try and beat the S&P, if you don't beat it, you have to have the story why you didn't beat it. And there's nothing to be ashamed of if you beat the S&P one year and then you don't beat it the next year, as long as you're in the game. You don't have to make, I will not make a net gain this year unless Apple recovers. And that's going to be tough. Tell me the difference between CrowdStrike and Palo Alto Networks products. Let's see. I wanted to do this because somebody asked me, here's a breakdown of the key differences. CrowdStrike specializes in endpoint protection threat intelligence. Their Falcon platform is cloud native and offers a unified approach. Palo Alto a wider range of security solutions, including network security, firewalls, intrusion, cloud security, and endpoint protection. Strengths: CrowdStrike cloud native, choosing the right platform. Ideal for CrowdStrike organization prioritizing endpoint security. Ideal for Palo Alto businesses requiring comprehensive network security alongside endpoint protection. Here are some additional resources you can find. Yeah. I think that's a pretty good, yeah. I'm going to leave this in here and I will get the link, share, create public link. And we'll copy this and then This is how to use AI. Happy Friday, Jay Cesar. I'm not worried about Apple. I don't think it's a nothing burger. I think we could go into the horrible mess that the government created for Microsoft back in the late 90s or early 2000s. I think that's a possibility. I don't think it's likely. And I'm betting on things, but I was looking at covered call strategies for next year to try and collect some premium on some of the stocks that I own. Let's see. Covered call ETFs. Do QYLG, RYLD, NUSI, DGAIA, QYLE. Bum, bum, bum. Covered calls, energy names, EQT. And LICY and SCO. Whoop, whoop. Look at that. Are we getting a rebound in oil prices coming down? Levered ETFs. Let's see if anything. Oh, ho, ho, ho. Coin long. ARC, URTY, UMD, DPST, USD. Is this one finally making its move to 90? I mean, look, this is a triple levered ETF trading sideways, getting ready for a move. If that's not a sideways trend, ever since March of last year, where DPST, which is a regional bank, 3 times levered, bull. Maybe regional banks are coming back. You're not out of the woods yet, but it's an interesting play. Leveraged ETFs. Oh, Vanguard just got a bunch. Low cost ETFs. VOT, VBK, VSS, VYM, VO, and RSP, which is the equal weight. The equal weight S&P 500 going for a move. Going for a move after a little dip and then going for a move. They're not the Tesla robots. Who's buying them? They haven't released any kind of pricing. I'll look at Snowmark for you. If I don't get to it, just ping me again. Just mention it. But I'm gonna get these scans done. But the Tesla robots, they're not gonna move the needle on Tesla. What's going to move the needle on the Tesla stock? I was telling this to Tesla employees yesterday. If you believe in full self-driving, get Tesla. If you think he can't make Vision Pro work, which is the driving with vision, if you don't think that will ever come to fruition, don't buy Tesla. If you think that Project Dojo with the AI, with making visualization will work, then that's where that's where you're putting your money to. That's it. Anything else, he's not, there's nothing else that is going to move the needle on that at all. CLS, IWM, Path, Coin, ARM, Crowd. We have Crowd. EQT. I do have an ELF. ELF at 208. I mean, I don't think the algorithm got you out, but ELF at 208 is going to be interesting because look at how far that MACD has come down, and it's crossing over again. And this may be going for a run. Just realize the TikTok ban is going to probably hurt this company in particular. Not owned, let's say. GE Healthcare, I like that one. C, KLAC, McDonald's, ARKK, ARKW, Zebra, Hub C, which is the cybersecurity from Israel. No, that one's shitty. Cisco, ARCF. CRISPR. Enphase. And ARCG. All the ARCs got a cross up. All 4 of them. That's a sideways move. This one at 30 is interesting. Oof. I mean, imagine buying this back in November at 50, and now you're at 82. I mean, you've had some downturns, but that's a solid move. Okay, let's look at the Dow. The Dow. And by the way, just so you're aware, Mark, on Snowflake. I mean, is it under 200? Because it's a buy. I mean, you can just buy it under 200. Dow and Cisco. There is no reason to try and wait. I've been adding to it as it's under 200. It's one. If it dips under 150, just, go even bigger on it. Dash. GFS. Global Foundries. CSX Railroad. That's been a solid one. X-Ray. Sirius XM. Oof. I just don't like that. Intuit, I'm pissed that they took away. Mint. Credit Karma sucks. Regeneron's interesting. I think they have a GLP-1. Airbnb has quietly come back. NASDAQ, let's go to S&P. S&P 100. I mean, this is a lot. Emerson. That's moved a lot. Wow. EMR. DHR. MetLife. UNP. BlackRock. And U.S. Bank. I think, U.S. Bank Corp. Hey, Q, I just got your email. I'll respond to you after this. Congrats on getting TrendSpider. I think you'll love it. I geek out on it. Expect it this afternoon. Okay, let's go to the 4 hour. And we'll look at snow. I got in at 162. We're at 158. I mean, what more do you want me to say other than this? I mean, that mark, I'm not getting out because the algorithm's going to tell me to get out. I'm in this trading range for snow. CrowdStrike, I've been waiting for this to get under 300. It ain't getting under 300. It's kind of putting in a new shelf up there. If we pull this back, let's go to a weekly. Because we're at all-time highs. If you pull this back to November 2021, which was the highs, there's nobody up here that's holding. The majority of people that are holding are here in the 150s. So they've doubled their money. They're just sitting on this stock. Nobody's selling. So you got the MACD way up here. I don't want to buy up at this price. This is one that I just like to kind of wait for. But, I mean, I'm just, I probably own it in ETFs. Apple, we can look at Apple. Apple on a weekly doesn't look horrible. On a 4 hour, man, this one just looks... That is a 2.79%. 2.79% move in the afternoon yesterday. Okay, I am going to... This is... Apple put buyer realizes 53% same-day gain. I mean, that was just... That was a crazy one. Yeah, snow is just one you add, and then when it pops over 200, you can start to think about it. Apple's one of these that I think people will be divided on. I'm an Apple fanboy, probably not the best, most objective, I should say, of people. But it's my largest position. We're going to push this over here. And then we're going to buy Apple stock. And then we're going to do the biggest movers. And then we're going to show a Shay. Tweet between my publics, the stocks that are currently offering the best risk to reward: Snowflake, Tesla, Melly, TDMX. I don't even know what TDMX. Rocket Labs, AEHR, and Zscaler is for potential short-term trades. Monitoring Apple, PenW, SOFI, SE, and 4. So I thought that was interesting. We're going to bring over this answer. And then TrendSpider. Morning, Pavin. Okay. Wah. We're going to go to the Qs. Let's see. Wah. Let me see. Are there any insiders selling? Tim Cook got rid of a bunch. I think a lot of people got rid of a bunch at that 190, 188, 192 back in November. February of this year at 180. Director got rid of $18 million worth. So let's check to see if we have any kind of news here. Crude oil, natural gas down 1.26%. Michael Dell on March 20th sold $211 million. Wow. That's going to be, wow. Sold $300 million worth of shares at 108. Oof. March has seen a lot of selling. Wow. I think that's setting it up to go. That might be a good one, by the way, if you want to. Let's see. I'll bring that up at the end. Dell has seen a ton of insider sales after earnings, and the pullback might be downside. Let's look at Dell real quick. I probably want to add Dell here. I'll go got you out with a 20% gain. It's probably going to get you back in You know, we might as well add this to our watch list. Let me see where everybody is holding from the last time it got you in. Yeah, there's a lot of people holding up there. But if you pull this back to the previous earnings, where it saw a gap down, I mean, you've got a decent size amount of people that are holding this up at 121. So 114, not a bad buy. Let's go to Seeking Alpha and we'll look at Dell. Strong buy. Yeah, I like this one. We're going to include this one. Okay, we're going to include that one. That's not a bad one. I mean, that's playing the AI thing. I think SMCI still has more upside to it, but SMCI was way down. It's only down like 0.89%. I think we're getting ready for a Friday. Hey-o, Friday. SOFI's tough. The value of, I think SOFI's a $10 a stock on retail pop, but they're not making money. I mean, I think I heard their CEO the other day talking about, yes, they will make a profit. That's when you want to be in the stock. That's when it's $10 stock. It's $7.44. That, year to date, you're down 25%. This is just an expensive stock. It is super, super expensive. If we go over here to Seeking Alpha and you look at it, look, profitability, momentum, valuation, it's a hold in the quant. It's just expensive. But if you're interested in it, if you use it, I've been thinking about putting money into SOFI because people have talked about how good their app is for tracking spending. And since Mint, Intuit got rid of Mint and moved everybody over to Credit Karma, I've been using, Empower. And I've got it on my, Empower, the app I am replacing Mint.com with. I've been using it. I'm not 100% happy with it. I like it a lot better than I like Credit Karma. But it still doesn't give me what I wanted. And people are saying SOFI does. There's a Fidelity integration that they have. I like that one. But yeah, SOFI's a $10 stock. I mean, on a pop, look, it pushed back to 10 up there. Here's August. It pushed all the way up to 12 in August. I think, it's just expensive, but retail's going to push that one up. Square, I own, $50,000 worth of Square, $60,000 worth of Square. That's now like $8,000. But it's slowly coming back up. I like Square a hell of a lot more than I like PayPal. But the valuation on Square is significantly more expensive than PayPal. You look at that one, the forward PE is 19. PayPal, the forward PE is 11. So pick your poison. Square has done significantly better. If we go over here and we look at Square on the quant, it's a hold. If you chart it against PayPal, select symbols. And again, time frame matters. I want to get rid of this one. I didn't want to get rid of PayPal. So if you look at this one, and you look at 1 year, Square is actually up 8%. PayPal's down 13%. Year to date, they're about the same. I mean, PayPal has come back 6 months. Look at Square. 1 month. Look at Square. 5 days. Square's beating it. You look at 3 years. Square's beating it. Still not good. You look at 5 years. Square's beating it. But 7% in 5 years. 10 years. I mean, Square's the clear winner. So, do you want to play PayPal as the rebound? I don't know. I like Square. I think Square is better than PayPal. I kept my Square. I sold my PayPal. I didn't take my PayPal and put it into Square, but I believe in Square more than I believe in PayPal because I think the CEO, what tipped me off about PayPal was when the CEO said we are going to shock the world, and then had that fucking press conference where nothing was announced. What'd you shock the world with? And then after earnings, he comes out and tells Wall Street, well, we haven't had enough time. Douche. Then don't tell me you're going to shock the world. Garmin. And then I'm going to start the show. Garmin. I'm a runner. I don't have a Garmin. I used to be a runner. I'm probably not a runner now. Where's the turnaround? Let's see. 5 days, 1.2%. 1 month, it's up 9%. Not bad. That's really good. 6 months, year to date. Let's see year to date. Why is it messing up? Seeking Alpha does this sometimes. I mean, Amber, do you use Garmin? It's not what I think. It's about what you think. I don't use Garmin. So, as far as the quant goes, it says hold. I trust it. It's not a buy. It's not a strong buy. It's a hold. But that doesn't mean that hey, if you're a runner, if you're buying a new Garmin, if you're out there searching for, fitness tools and Garmin's the one that you're choosing. Yeah, Garmin has great products. Just I'm not using them. And I will tell you, if you are not in the Apple ecosystem, Garmin is the way to go. If I had an Android phone, I'm not getting an Android watch. I'm getting a Garmin. But if I have an Apple product, I'm not getting a Garmin. I'm getting an Apple Watch. So, but as far as 121, if you got it at 121, great. Up here at 148, it's a little bit tougher, but you got 178. In September 2021, you hit 175. So you're about to get the golden cross on the weekly. Can't argue with this. Strength into it. Yeah, Amber, if you've got it, I don't see why you would say, if you're in it, why would you sell it? Remember what I always tell, and I try and convey this. I'm not what you would call somebody who's a trader. I am somebody who has made the large majority of money in buy and hold. And you will see tomorrow when I release the talk with Steve from Seeking Alpha. By far, there is and this is by far, you will make your money by dollar cost averaging and just putting money into the market, into work. If you want it in stocks, put it into specific stocks. Don't worry about fluctuations in price. Just put it into certain stocks and let it sit there and work. Those are the stocks that you want to pick. Those are the stocks that you also want to trade. If you want to trade them, you can get in and out of them, no problem. But do not sell your entire stake. You can trim them, but you're trying to make investments in these. And so you've got to determine, okay, my dollar cost averaging on 50% of my portfolio in my index funds, in my QQQ, in my VOO, in my XLK, those things I ain't touching. The only thing I'm doing is I'm going to put more money in. I'm not using that money to pay for my rent, my car note, my mortgage. I am using that money to just build future wealth. And the money is in there working. And if we have a 10% pullback, I'm not selling. I am just adding more to. That's the way I've used Apple. That's the way I've used the Qs. That's the way I've used XLY. That's the way I've used XLK. That's the way I've used QCLN and IGM. QCLN hasn't worked, but I've simply been adding to it, and I haven't taken money out of it. Should I have? Absolutely, I should have. QCLN is just a nightmare of a portfolio. I haven't trimmed it. I haven't gotten rid of it, and I've added to it several times, and I've been hurt every time. Because look, I mean, this is renewable, clean energy. This is mostly solar, and I'm getting killed. But luckily, it's not a huge portion of my portfolio. It's just a small portion of the 30% of my total portfolio that is ETFs. So, okay, I'm gonna start this mofo. Okay. Good morning. It is Friday. Double twos. Friday, March 22nd. Double twos. I got a nice email last night. We were talking about fractional shares yesterday, and I kind of went off. Diane emailed me last night. It was confirmed. Schwab doesn't allow you to buy fractional shares. They call it slices, but they will only allow in certain things, individual stocks. They did, of the S&P, they wouldn't allow them to buy fractional shares of SMCI because it was just added to the S&P. Go to Fidelity. Just go to freaking Fidelity. I mean, that to me, I'm out. I'm out. If you tell me I can't do something on your platform that is generally accepted on freaking Robinhood and Webull, I'm out. Honestly, I'm out. Fidelity, it's a great mix of the two. So if you want an introduction to Fidelity, let me know. Other thing that's great, Dan Ushman, who's the CEO of TrendSpider, he put this out yesterday. Scanning, backtesting, alerts, smart checklists, and more using custom indicators. So you can basically create an indicator and you can put it in there and you can backtest on it. You can alert on it. You can use your smart checklist. You can use scan it. TrendSpider is so good. And this is my comment. You guys I've been around for 4 years. They have increased the usability of this platform by just incredible amounts. How many features they launch? They don't raise the price. Honestly, it's crazy, crazy good. If you want TrendSpider, go over to my link tree. You'll see as we go along on this podcast, you'll see me use my 4-hour algorithm. The main tool that I use is TrendSpider. There's 2 basic tools that I use. Well, 3. There is TrendSpider, there is Seeking Alpha Premium, and then there's Alpha Picks. And Alpha Picks is one of those things. Tomorrow, I will release my talk with Steve Kress from Seeking Alpha. He is the quant genius. He is the guy in charge of Alpha Picks. These guys just blow away the S&P. It's 2 picks per month. They tell you when to sell, but they tell you 2 good picks per month that you should buy. Building a portfolio. We go over all of that. Look at Alpha Picks, 105% versus 32.84%. And it's even updated. Let's go over to Alpha Picks and let's look at their performance. 132% versus 38%. They actually track it live. You get all of these articles with in-depth analysis with Alpha Picks. And so you go over to my link tree, any of these tools, I've got discounts for them. Right here, TrendSpider, you click on that, you get a discount. You email me, and I'll email you back a welcome letter that includes everything you need to import all of my tools into TrendSpider. Seeking Alpha Premium, this has a free 7-day trial. You just click on that link, sign up. You don't have to do a damn thing. You can get all the articles and everything. And then Alpha Picks, and then Webull. mean, honestly, I told Diane when she said, hey, we can't trade, fractional shares. I told her, I said, just get Webull. You can do anything you want in Webull. It's not a great brokerage tool. It is not a brokerage. This is simply a trading platform. So understand the difference. So where are we in the markets? Let's talk about it. The Qs. We're down 0.15. I think you're going to see us up by the end of the day. It's just kind of floundering. We've talked about this trading range that we're in. And the trading range to me is here between 434. You can kind of see right down there about 430 and this 450 range. I mean, that's kind of where we're at. Do you want to buy right now at 445? Algorithm has you in at 448. My algorithm makes you 28% over 28 months. I'm sorry, 24 months. 28.3%. That's pretty good because, buying and holding made you 26.9. So what you're looking at is you're looking at entry points. Entry point at 448 and you're trading at 445 right now. Simply add to it. And 5-10 years from now, when you've got the Qs and it's at 900, you're not going to remember if you bought it at 448 or 445. That's the key to building wealth, is you want to dollar cost average your way in. Steve and I talk about it. And again, tomorrow I will release this talk. I think of all the podcasts I've done, this is going to be one that you should listen to. It's the weekend. It's an hour long. Do not give me that an hour is too long to listen to on the weekend. Put it on in the car. While you're driving your kids to soccer practice, put it on. Share me with the kids. I don't curse. Not that often, at least. I don't get that angry. But check it out. And the Qs, we're in this. It's just, we got this trading range. I think we're setting up for a leg higher. That's the biggest deal. I had somebody asked me yesterday, hey, I don't know the difference between this company and this company. What should I do? Well, use AI. Go to Bard, go to Gemini.google.com, go to ChatGPT. I have a friend in Iceland and he paid a bunch of money. I mean, we're talking to tens of thousands of dollars for a private, 2-week vacation. And he's like, should I tip the guide? And you know what I did? I went to ChatGPT. I said, should he tip the guide? It said tipping in Iceland is not expected. So I said, no, you shouldn't tip the guide. Use AI to your advantage. What did I want to do? Today, my example is, hey, I'm holding Palo Alto Networks. I want to build my position in CrowdStrike. What's the difference? I will post this difference in my newsletter. You can look at it. Tell me if you think that Gemini did it right. And you can ask follow-up questions to Gemini. You can ask follow-up questions to ChatGPT. All of this AI tools, if you're not using them to make yourself smarter and to have a conversation, learn how to do this. This is the hidden tool that a lot of people aren't currently doing. If you're just going to Google and you're Googling something, don't Google it. Ask ChatGPT, ask Gemini. And you can take a look at these things. Again, this is a really, really good tool. This opened my eyes. I mean, just overview. I think CrowdStrike is more cloud platform. Palo Alto is more premise-based. But I think Palo Alto is moving towards the cloud-based. So Palo Alto is significantly bigger than CrowdStrike. But I do want to... CrowdStrike is building a better position. If we go over here and we look at... I'm going to build this comparison for you. If we go over to CrowdStrike, you can see it's a hold right now in the quant. And I just, I don't want to start my position out at all-time highs. It's just a little bit uncomfortable for me. Doesn't mean that I won't, but I just want to see more conviction on it. But let's look at the performance of the two, because Palo Alto Networks, it's a big enough position. And I've said, I think you should buy this under 300, and Palo Alto Networks is under 300. If we look at the one-year performance, CrowdStrike is tripling what PanW is doing. If we look at 3 years, Palo Alto, 166%. CrowdStrike is only 68%. So as you pull it in year to date, look at CrowdStrike, 29%. Palo Alto is down 2.46%. Bringing it even more. 6 months. You can see CrowdStrike 5 times what Palo Alto is. So timing matters on this. You do want to build your position. You bring it in 1 month. CrowdStrike is up 12%. Palo Alto's up, not that 1 month, Palo Alto's up 9%. That's really good. You bring it in 5 days, and CrowdStrike is doubling, 2.94 versus Palo Alto at 1.15. So again, timing matters, but building this story up, you use the tools that are available to you. I have Seeking Alpha. I have TrendSpider. Gemini and ChatGPT are out there free for you to do. So understand you need to, when I say tools, it doesn't mean paid tools. It just means there are tools out there. These things didn't exist when I built my fortune in the early 2000s. None of this stuff was out there. So the tools that you have today are better than ever. So make sure you have a system and you do this. Shea Boular on Twitter. This is another tool. Twitter is another tool for you. Between my 2 public portfolios, the stocks that are currently offered the best risk reward are Snowflake, Tesla, Melly, TMDX, Rocket Labs, AEHR, and Zscaler. Ones that looking for short term: Apple, PanW, SOFI, SE, and 4. So again, tools. These are the tools that you can use. Let's look at the biggest stock movers of the day. 2 of them. Oh wow. All 3 of them were earnings from yesterday. I was wrong about LULU, which is down almost 13%. I think that LULU is a decent buy here. And if I go and look at LULU, some of the analysis that I look at is from Seeking Alpha, and we can go and look at LULU and we'll look at the summary. We'll look at the summary of this. It's a quant hold, and I said the valuation was a little bit sketchy. A little bit, out there. But if we go and we look at the chart, remember, it's a buy from Wall Street. If we go and look at the Wall Street buys, and we look at this, it's got a 3% upside, average price target 496, but that's at yesterday's 478 price. You know where we're trading today? At 413. 413. And the quarter was really good. The quarter was excellent. Absolutely stellar. It was the guidance that brought it down. And I want to show you because I had drawn this. I don't remember why I drew this, but you can see right here where it bounces off of there. That's an old support line that provided some resistance, and you got out there. It's around 408. And I was drawing this where we had some previous resistance here. You can see previous resistance right there at about 465. You're trading at 413, which is down close to this. So at 410, when you're down at this area, you probably want to take a look at this one. This does it again. The valuation is a little crazy, but when we go to the weekly, look at where 413 puts you. 413, if you're really looking at it, and we pull this volume level back here to November 2021, the stock was trading at 485. You never built out a huge shelf up here, but there's enough people that's going to be a magnet for this stock. Now, again, if you're buying LULU clothing, you should absolutely own this stock. If you are like me and you go into Amazon and you look for LULU knockoffs, don't buy this stock. It's expensive. But I think this is a very, very good one for those people that buy LULU clothes. And there's a lot of people out there who do that. Market just opened up. You can see it trading here at 413. I think your absolute support level is 386. I think if you get this with a 3 handle, I think you'll be very good for the long term on this one. I think the guidance, I don't know if they're sandbagging. But again, I was wrong about this one. I am not in it. I may get into it. I like, again, everybody that I talk to that buys Lululemon, they freaking love it. Now, I was initially wrong about Nike because Nike popped. And then they got on the call, and Nike shares, they're trading in let's see. Nike is trading, it's at 100. No, I'm sorry, it's at 93. 93 it's trading. So it popped down on the guidance. Again, it was all about the guidance. LULU was about the guidance. Nike was about the guidance. And I ranked these. I said LULU was the top. Nike was my last. The middle one I said was FedEx. And this was the one that I thought they would announce something with Amazon. They didn't, but they popped over 12%. FedEx this was a really good quarter for FedEx, and they gave great guidance. There's something going on with Amazon here. And I wonder if Amazon's going to switch from UPS to FedEx. You're gapping up. You do not want to buy this at 287 right now. I'd wait 3 days because the gap between 265 and 288 right now, too big. Too big. Now, from a long-term standpoint, this has 300 in it. So if you want to buy at 280, dollar cost your average way in. That's what you do. But don't go all in. You don't go balls deep on this one. Oh, sorry. If you're listening with your kids, sorry. Yeah, you don't want to listen with your kids. I guarantee with Steve, I'm not going, using the term balls deep. But yeah, the biggest losers of the day, Reddit. Wait 6 months for Reddit. 3 months. Don't get into Reddit. You're gonna see it pull back to the $34 range that people bought it for. They're not making money. Tesla declined by 4%. We'll go over Tesla in a little bit. The big one of the day yesterday was Apple, and it's the DOJ lawsuit. And I posted this on Twitter. Knowing the DOJ press conference was coming, this was the most obviously ridiculous trade that everyone should have taken yesterday. When that thing was announced, this guy put in, he bought puts. He bought what, 401,000? No, he bought $760,000 worth of puts. He made $401,000 in one day, just on puts. Apple, I think the DOJ. Here's my take on Apple. I may start a covered call strategy on this one. I may sell, I think it was 195 calls for next January. I may sell those calls. What will happen is I have a huge amount of Apple shares, and I can collect premium. I think it was about $80 that I would collect, and then I would sell it for $195 if it's at $195 next January. So a covered call strategy. Check with your options experts. I was chatting with Bullish Bets last night. I am a moron with options. So what I do is, and this is why I suggest Fidelity. I am a high net worth individual. I do not know that they provide this service for everybody, so take it with a grain of salt. But I will call their trading desk and I will say, I'm looking at this strategy. They will go over everything with me. And I will say, yes, let's do the trade. And they will guide me through the trade. They will guide me through everything that I need. But I am a high net worth individual. I think I get extra care there. This particular analysis on Seeking Alpha, they're saying it's not that big of a deal. We can ruin the ending of it. But this person is saying, I'm upgrading the stock to a buy rating as I view generative AI to not be priced into the stock, and I view any pullback related to the DOJ antitrust lawsuit as a buying opportunity. I'm not buying it because I own too much of it. I would suggest if you do not have something, then buy it. Again, don't listen to a douche on the internet, but for me, that might be a buy. Now, one that isn't a buy right now is Tesla. I was at Tesla yesterday. My car is getting a new hood. There were some scratches under the clear coat, which anybody would probably pass up. But I was that douche who said, hey, it just made me feel uncomfortable. I do take care of my cars. I wash them every weekend. I put a ceramic coating on it. I kind of detail that stuff. So it would annoy me to be able to see that every time. So they're doing a great job. And I cannot commend Tesla enough. Tesla is amazing, absolutely phenomenal. I absolutely love the service that Tesla provides. The car, absolutely optimal. The stock, little bit of a different story. They're curtailing their EV production in China. My only assumption is that BYD and other companies are having basically chipping away at Tesla in China. The stock, as far as Seeking Analysts, is a hold. Wall Street is a hold. As far as the quant, it's a hold. Tesla's stock is broken right now. And so I don't want to see you get heavy into Tesla. I said when the algorithm got you in at 170 that was an iffy kind of thing. I don't know that I wanted you to get in here. And I said this. Yes, it popped to 178. Yes, it looked good. when you bought it at 172. You could have bought it down here at 160. You're back in the 160s. From a long-term standpoint, what I'm worried about is that we just don't have any support down here. You're seeing the death cross of the 50-day. It's kind of using that 200-day. We need something. And the one thing that will bring this out of this doldrum is full self-driving. The Dojo, the version 12 just got released. It is now trained on the AI, and it is using decision-making instead of actual kind of instructions. It is getting very, very good reviews. If Elon and team can figure this out, this is back to a $300 stock. I mean, honest to God, it's back. And Cathie Woods will be predicted right again. But understand that volume shelf at 250, there's a lot of people holding here at 250. A lot of people holding here at 250. There are still, that's the majority of people are holding here at 250. And that's from the highs. That's not all time, but that's from the highs back in November of 2021. So there's a lot of people holding on to this stock. Doesn't mean, you can't go lower. And that's what I'm worried about. Look at here in January 2023. You got all the way down to 100. The valuation on this is where it comes into play. The valuation on Tesla is just too much. The PE is 40. If these guys are reducing their production in China, if they don't deliver enough here in North America, they raise their price. But I've heard that they've started to take more money off of the cars again. If they can't deliver enough cars here in America, if they can't deliver enough cars to sustain this stock price and the PE, that's where you're going to get hurt. So understand, car companies trade at a PE of like 4. This one trades like a tech company. That's why full self-driving is so important to it. So understand the stocks that you get into. I would still hold out on Tesla. I would rather buy it at 190 and see it go to 250 than buy it at 170 and see it go to 140. That's where I'm at with Tesla. But again, I'm a douche on the internet, so do your own due diligence. Alphabet gains as Webbush adds best ideas. It's their best idea target. Their target price is now 175. Where are you on Google? You're under 150. I've said it before. No, you're at 151. It's up 1.82%. You are up today 1.87%. Again, you're kind of flirting with this 154, 155 price. If we look at the weekly, you're getting up towards that double top area where you double topped out. We have to hold above 150. A catalyst is a price target raise. I mean, honestly, a price target raise on Google is a good thing. If we go and we look at Google over here in the Seeking Alpha, it's a strong buy. I've said it before, get it under 150. I think if you want to buy it right now at 151, you want to buy a couple of shares, just buy a couple of shares. I think this is an undervalued. We went over Gemini. We know that ChatGPT had the same kind of the same kind of errors when it came to the founding fathers and stuff. It was trained with the same data. So we know that it's got some problems. I think Google's a buy. Honest to God, I need to add more Google. I think Google is one of the undervalued stocks in the great 8. It is one of the undervalued. If we go over here and we look at Google, remember Tesla's at 40, and we go and look at Google, their forward PE is 18. Their PEG ratio is 1.33. Let's go over here because what I want to do is go to the valuation. And one of the things that Steve had taught me was to look at the PEG ratio because that's the growth. Let's look at this. Google's is 0.93. The sector median is 0.72. So, it's a C minus. It's not a D, not an F. Again, it's ranked number 2 out of 57 in its media and services stock. Oh, you know what's number 1? The other Google. So this is a buying opportunity for Google. I think you buy it. Again, it's going to be at 170 probably. 32 breakout ideas by Bank of America. Part 1. There's 2 parts to this. This is great. Under the AI theme, Microsoft and Google. Under the computing thing, IBM, Apple, Akamai, NVIDIA, Cadence, Synopsys. Taiwan Semi, Amazon, Intuitive Surgical, Rockwell. Under the communications name, Qualcomm, Equinox, and then there's a part 2. You get the link to part 2. I will put this link in my in the newsletter so you can read it. Again, the newsletter is free. It's 100% free. The newsletter is. One of the we talk about tools, and one of the tools, even if you don't want to pay for a tool, one of the tools is FinViz, and I talk about it a lot. I was over on FinViz preparing for the show, and I noticed, look, Michael Dell sold $211 million. And on March 15th, he sold $124 million of Dell. And so I took a look over here. I said, look at Dell. PEs of 13. These guys are in the server game. They're installing more servers using Intel chips and things of that sort. It's kind of competing with SMCI. Not on the scale that SMCI has better products, but and SMCI is more in the game than Dell is. But Dell has other services. Year to date, you're up 49% on Dell. And I noticed they're insider selling, so I went down here to the insider sales. And I said, this is interesting. Look at how much he sold. He didn't just sell $211 million. He sold the day before $111 million. Look in March. How many people are selling Dell? And it is after that their earnings. That is after their earnings. They're all selling it at 120, 100. Does it mean that it's overvalued? I don't know. I mean, we can go and take a look at Dell you can use whatever charting program you want. I use TrendSpider, but whatever charting program you want, you can use. I said, hey, after this earnings, do not buy it because I think we're going to fill this dip. We didn't. We are 3 days past this. The algorithm doesn't have you in, but it will get you in because that MACD is crossing up. Everybody that's listened to me knows you can get my algorithm with when you subscribe to TrendSpider. It is free when you subscribe to TrendSpider. I send it to you if you use my link. But if you don't, it's based on MACD. So take a look at that MACD and look, it will get you in. It's just got you out with a 20% gain. Now, my algorithm makes you 133% versus 117% with just buying and holding Dell. 117% is nothing to sneeze at. And that's over 24 months. You win 55% of the time. So when the algorithm tells you to get in, you get in this name. Now, when I was looking at this, I pulled it back to the last earnings and I said, let's see from a volume standpoint where everybody's holding it. And we can pull it back here and you can see nice volume shelf down here at 82. That's where it kind of capitulated right before the earnings. But we're putting in a pretty big freaking volume shelf at 120 and you're trading at 112. So I go over to Seeking Alpha and I look up Dell and I say, the quant has it as a strong buy. Dell has untapped upside. And I read this article and I said, this is a buy. It's ranked number 2 out of 27 in information technology. If we go over here and we look, SMCI is number 1. Again, using the tools that you have, you go and you find these stocks. I will be buying Dell. It is down 1.35% today. I will be buying Dell because I do think while this gap is starting to get filled, I do think maybe you get down below 112. You might get into the 109 territory today. You might get into the 107. I am happy to buy this company because of the growth, because of the low PE. I think it's undervalued, and I think we see it again. What I think was there are so many people that are excited about this stock at 120, and all of these insider sales brought it down to 105. That's what I see. I see all of those insider sales bringing this down. But you know what? Michael Dell, that dude's just putting in one hell of a pool with a koi pond. He's adding a koi pond to his pool for $111 million. That's all he's doing. That's it. So again, use the tools that you have to find the opportunities. Let's go into the social requests. William, just one thought that may be useful to your listeners down the road. My system relies heavily on unusual whales options tracking, not to trade options, but to gain sentiment. Absolutely, William. And you know what TrendSpider has? Unusual options. You can see it over here. I don't know options well enough. I am stupid. I am absolutely dumb. But they have unusual options here. You can take a look at that. If you understand what unusual options are and stuff, you can take a look at this stuff. I don't use it, but I do think you should. If you learn unusual options, it is a fantastic tool. I don't use it. William uses it. I think it's a fantastic tool. I just don't. And it's because I'm done, William. I know people listen to me. I can make money. I can do it. Your system needs to work for you. Unusual options, it clouds my head. It gets in there and it just clouds my head. Ryan from Facebook. I'm a daily listener and car manufacturers have been mentioned a decent amount over the last few weeks, but no talk of Toyota. I got in on 1.4 at 183. It's up to a high of 250, 36% gain. I like Toyota because they are heavily focused on hybrids and, of course, an international company. What are your thoughts? And my response to Ryan was, I'll look at it today, but I've never traded it. And part of the reason why I've never mentioned Toyota, I've said it because it's listed high in Seeking Alpha, but I don't know the chart. And the charts are where you get your knowledge. I've traded GM, I've traded Ford, and I've traded Tesla. You have to study the charts that you trade. And Toyota isn't one that I've studied. I don't know how this one reacts. Algorithm makes you 46%. Buying and holding makes you 42%. Algorithm just got you in at 244, and you're currently in a run. Fantastic. There's gaps all over here. For me, this one is just too messy for me to trade. But I won't doubt that it's good. If we go over here to Toyota and we look at the quant, in the quant, it's a strong buy. But it says Toyota is a risk of cutting their dividend. Toyota has displayed warning signs that have historically led to dividend cuts. The company has a dividend safety score of F. So if you're in this for the dividend, just avoid it. But they may cut it. That'll cut the price back. That will affect it. But as far as valuation, as far as everything, this is an A. It's ranked number 1 out of 32 in consumer discretionary. Subaru is number 2. General Motors number 3. But again, it's a quality company. Just not, and I don't mean to say anything bad about Toyota by not including it. I just don't trade it. And I don't trade it enough. I mean, we can look at how many shares are actually floated here in the U.S. 1.35 billion. It's great. Market cap, 343. Income, 31. PE's 10. Forward PE of 11. I mean, that's expensive for a car company, but you can see that doesn't matter to the quant. Even the valuation is a B minus. So, you do again, Ryan, I don't mean to display that, hey, I know everything. These are just the stocks that I know that I've studied. Toyota, I haven't studied. So, but looks really, really good. Kevin from Facebook, I came across NVT when I was playing with Scans and TrendSpider, and I ended up adding it to my portfolio last fall, and now it's up 40%. My technical analysis isn't exactly the best. I was familiar with some of the products they had on their website because we utilize them in my current job, and their corporate headquarters is walking distance from my old townhouse in Minneapolis. So I said, hey, how about that? Let's give it a try. I wanted to throw them in the mix to hear your take on the podcast. NVT. I don't even know what NVT is. Let's see. NVT, Nvent Electric PLC. Let's see what they do. Together with its designs, manufactures, markets, installs, and services electrical connection and protection solutions in North America, blah, 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 blah. This was interesting. The seasonality stuff that Steve had pointed out to me. I like it. You can see the mean, the median of seasonality on this one. Let's see. I mean, solid 1-year gain of 77%. Quant has you as a hold, and it's the valuation and revisions. Wall Street has you as a buy. Let's see how many analysts actually. 12 analysts. No, but I mean, that's not enough to give you a great analysis of it. But if you look at the valuation and the revisions, we look at that PEG ratio that he told me to look at. Where is the PEG? PEG B minus. So I wouldn't necessarily worry about the hold score on this one because it does have some growth. Let's look at the revisions. If we go down here and look at the revisions, consumer earnings per share revisions trend doesn't look bad. Doesn't look horrible to me. 3-month trend, they are bringing it down a little bit with their consensus. December 2024 consensus. So, I mean, this looks like a great one. And again, if you found it based on the chart, I would trade it on the chart. NVT, let's see. God, look at that. Kevin, there ain't no reason to get out of this one. There ain't no reason to, get into it. The MACD is super high up there. The RSI is at 75. I mean, for me, I'm not getting into this one, but kudos to you for getting in at, you're up 40% now. God, that's a great trade. That's just again, using the tools. He used TrendSpider to find this one. He works in electrical. They use the tool. Use the tools that you have, and go and find out about them. But yeah, great trade. I don't know enough about the company, but it seems like a fantastic company that's growing and should continue to grow. I'm just, again, it doesn't get me excited. Doesn't mean anything about it. Alex Ultra from Spotify wants me to look at United Airlines. Just know I hate airlines. Trading airlines, perfectly fine. Holding airlines, absolutely not. Warren Buffett got out of these for a particular reason, and that particular reason is they're just crappy things to hold on to. With Boeing, United Airlines ain't going to get their delivery. You can see that took the stock down on their last earnings. It's come back. Algorithm makes you 33% on this. Buying and holding makes you 11%. You win 28% of the time, but your average win is 15%. So the algorithm actually trades this one really well. You're in at 43. You're up at 46. You're almost at a 10% gain on this one. Long term, you got, the 50 days bouncing off. That 200-day quickly moved positive. So maybe it's time to get into this one. If you fly United Airlines, maybe it's time to get in. If we look over here at UAL, let's go over here and we'll go to the summary tab, and we're going to take a look at what the quant and everything says. It's a buy. It's not a strong buy, but the valuation is an A+. It's ranked 5 out of 26 in industries. Number 1 is SkyWest. Number 2, American Airlines. So it's ranked number 5. Not horrible. Again, A+ on valuation and stuff. If you like United Airlines and you fly United Airlines, personally, I would use the algorithm. The 4-hour algorithm absolutely kills it. 3 times what buy and hold does. And the algorithm got you in at 43. You're in, but that RSI is way too high for me to feel comfortable getting in. But as far as long-term buy and hold, there's no way. I mean, let's look at United Airlines long-term buy and hold against the S&P, because that's where you really want to look at this one. Let's just look at it against the S&P for a 10-year guide. Look, 10 years, you've made 2% in United Airlines. 10 years on the S&P, you've made 182%. There's no reason to hold an airline for long term. It's basically, it's worse than a bank. Worse than a bank. One that I do want to point out, by the way, that we talked about from a standpoint of a breakout. Look at how perfect that breakout is. Look at how perfect that was. I believe I put this range in here back in March 14th, but look at how perfect that one was. It just capitulated. So again, when you're trying to set your tools up, when you're looking at things, I know I look at things a little bit differently, but Goldman Sachs, the algorithm blows things away. The algorithm, when you get in, 59% over 24 months. Your average win is 7.91%. You win 39% of the time. Buy and hold, you're up 22%. So again, the algorithm performs. I continue to say this. I don't know why you wouldn't get TrendSpider. It is $895 for the year. If you've got a large enough portfolio, get over to TrendSpider. $895. If you've got a large enough portfolio, I get you my 4-hour algorithm. If you trade enough, I give you the 4-hour algorithm. Find stocks that you like. Find stocks that are available. And then do the scan. So all the scans that are in my newsletter, go over the newsletter. Yeah, I like that one. LULU, I pointed out yesterday. I bought AVGO yesterday. This newsletter is 100% free. And then what you do is you go down to the bottom, past the social request, and you see all of these scans. And if you have TrendSpider, you can put these symbols into the 4-hour algorithm and you can see the buys. Again, this is from yesterday. I will post today's scans in today's newsletter once I'm done with this. So if you look at it, again, the newsletter is to accompany this. First one that has a cross up and in the 4-hour algorithm and has a buy, XLK. XLK, 181 yesterday. You're trading at 182.28. 181.06. That's when you want to enter. You're going to have an opportunity to enter it today. Yes, it went up to 185 yesterday. You can enter at 182. Do you care that you bought it? You didn't buy it at 181.06? No. Algorithm makes you 23% in XLK. You make 1% buying and holding XLK for 24 months. You win 36% of the time. Your average win is 7.35. I'm sorry, that's XLY. So I'm going off about XLY. But XLK right here, 211. Sorry, 211. You're trading at 209. Algorithm makes you 32%. You make 36% buying and holding. What does that tell me? Tells me I got the safety of just, hey, when do I enter? Because I'm just going to dollar cost average my way in here. The stock is performing as a buy and hold. I'm going to find entries. One that, this is an ETF that I continue to add to. Don't ask me why I continue to add to it, but I do. It is QCLN. This is clean energy. 3402. Am I adding to this one now? No. I've added enough to it. And if we look at the weekly on this one, this is just a killer. I mean, the weekly, it's had a rough 2 years. Do I think it's getting back up here? I mean, higher for longer is killing this one. So it really, really is. CrowdStrike. We talked about using CrowdStrike. CrowdStrike, for me, little too expensive. Can't argue with it, but it's a little too expensive. Algorithm does not work on this one. Algorithm loses you 15%. Your average win is 11%, but you only win 36% of the time. It's gotten you in and out too many times, and there's too much fluctuation. I'm looking for an entry on this one, but I'm looking for an entry at probably a little lower price. We talked about Goldman Sachs having that nice range. I'm seeing the nice range in here too. I mean, again, you kind of gapped up here with the earnings. I'm seeing that nice range between this, and you're right in the middle. Makes me want to buy it, but I'm not rushing into things. Algorithm got you in. I want confirmation. I probably will regret this and probably have to buy this at 340. But CrowdStrike has a cross up. The ARK funds, ARKK, which is the flagship, ARKW, ARKF, and ARKG, they all have algorithm entries. And you're seeing the capitulation right here. It's a little bit more of a wide capitulation, but you're seeing from December of last year, you're seeing the nice top there, which probably is going to provide more resistance, but you're seeing this range right here, and you're right in the middle of that range. So the capitulation is whether we go higher, whether we go lower. Right now, we're in a bull market. In my mind, I think we go higher, but higher for longer hurts the ARK funds. ARKW, same kind of thing. You're not seeing you're seeing this one break out a little bit more than ARK. I like this one more than ARK. Go shoot me. ARKF, ARKG, Zebra, CRISPR, Enphase, McDonald's, Cisco. You've got levered ETFs, CONL, which is a levered against coin, which is Granite shares 2 times coin. Entry in here at, let's see. The first entry was 21. This is just another leg up. Take a look at this. So the algorithm on this makes you 647% over 19 months. Buying and holding, which you don't want to do on triple levered ETFs, makes you 241%. Now, this one is an interesting one because the algorithm got you in at 21. What this scan is saying is that even though it's not an entry because you're still in, this one may go for another run here. And so that's what it's saying is look at the MACD. It's come down, but you just kind of capitulated. You did come down, but the RSI is here. Now, remember, triple levered ETF. I don't want you to add this on a Friday. So I just don't want you to add this on a Friday. It's a little bit of a difficult one, but yeah. Try it out, CONL. Look at my DPST, which is one that we trade a lot. This is the triple levered banks, regional banks. This is the bull. This one's been capitulating around that 200-day, 75.99. You look back here in December, this was trading at $100. So it's pulled back. Now it's a decaying asset. It's 3 times levered on a daily basis. So you don't want to hold this one. The algorithm loses you 44% on this. And it's because if we look at the long term of this, we just had one of the biggest losses on this with the February and March regional banking crisis with Silicon Valley last year. And then it reverse split for 10 for 1. Remember, it's a decaying asset. So you don't want to hold on to this thing. Oh, and lovely, the dogs are crying. But you don't want to hold on to this one. So there you go. All of the other ETFs, everything else will be in the newsletter. Sign up for the newsletter. It's absolutely free. I will release the talk with Steve tomorrow. I will also have a paid newsletter tomorrow. It'll be more educational about things. I don't exactly know what I'm going to write about, but I've got some kind of stuff in the hopper. I did some writing with some drafts and stuff, and I'll pick out what I want to post. But if you have any questions, if you're a paid newsletter subscriber, just tell me what you want me to tell you. Tell me what experience that I've had that maybe you want a little more depth in. Tell me what tool you want a little more depth in that I use. Do not come at me and say, hey, can you explain options to me? My ass ain't explaining options to you. Hey, do not come at me and say, hey, Unusual Whales, can you tell me where to find all the political buys? Because you know what? TrendSpider has all that stuff. TrendSpider is everything. I am not a TrendSpider expert. I barely tap the surface of what TrendSpider is able to do. I barely touch it. Again, I just use the basics. And I've made money off of it. I mean, I was a paying customer before I became an affiliate. So I really, really like TrendSpider, but don't come at me with like expert questions on this stuff. I'm not an expert. You guys listen to me enough. The paid newsletter subscribers, they all know what I'm about. So ask me, fundamental questions. Ask me about, after you watch the thing with Steve, ask me anything that Steve mentions. I can probably, make my way around that. But, again, use the tools that you have. Everybody has free tools. AI is out there as a free tool. FinViz is out there as a free tool. There are plenty of charting programs that are free. At very worst, open up a Webull account and get the desktop software for Webull. That is a charting program. Use Thinkorswim. You can find plenty of charting programs. So don't think you have to pay for this stuff. But yeah. So here you go. I will talk to you guys Monday. But I will talk to you tomorrow with my interview with Steve. Okay, take care. Bye. Okay, good morning, Steph. Airlines suck, Chris. Airlines are horrible. I'm glad. Yeah, Empower, I was impressed at first with Empower, D-Man. And then the more I dug into it, the less I'm impressed. It doesn't give me what I needed from Mint. And it doesn't mean that, it's not a good tool. It just doesn't give me. Pavan, it's the valuation on AMD. I mean, AMD is 100% the valuation. But if you think they're going to be the number 2 player in AI as far as chips go, no reason to get out. I hold AMD at about an average price. Let me see. Okay, hold on. Who called me? I don't have a voicemail. Okay. I have a bunch of texts, but let me see. Okay, AMD. I know I did not add during this run. I was worried about SMCI and NVIDIA during that run, so I did not add, but I added under 100 a bunch of times. Wow, shit's not just coming back. It's kind of staying flat. Let's see. All positions. We will look at my AMD position. My average purchase price on AMD is 114. So I'm not worried about this. This pullback. But Pavan, remember, for things like this, and everybody's different. If it was a trade it. You should not have been in this past March 11th because you lost confirmation on the 4-hour. The MACD crossed down. The RSI crossing down. Don't wait for the algorithm. You have TrendSpider. You know what the exit on the algorithm is. It uses the moving averages. The moving averages were moving too slow. The MACD crossed down. The RSI was in free fall. I mean, even the next day when you saw this huge candle and then you saw this lower volume candle, it should have been clear to get out. Now, when do you get back in? In my mind, you get back in when the MACD crosses up and the algorithm gets you back in. But you can see if you pull this, again, if you're trading, say you got in before the last earnings, we'll just put it up here. You got in at about 170, okay? That's right where the volume shelf is. So, I mean, you're clearly right back at the volume shelf. So in my mind, I think that the MACD probably crosses up here. I'd rather buy it at 180 than see it come down here at 152. The valuation is nuts, though. I mean, the valuation is absolutely incredibly nuts because the forward PE is 31. I mean, again, they're the number 2 in AI. I can buy the number 1 in AI with a forward PE of 30. So... But the key to NVIDIA and AMD, watch tomorrow's interview with Steve. He goes over why NVIDIA is not in alpha picks, and you'll see. But yeah. AVGO. Did I do well on AVGO? I don't even know. 1330 is where I bought it. Algo got you in at 1366. It's holding up. I mean, here's what you have to know about AVGO is that we're still in this upward trend on the weekly. The MACD is crazy high. The RSI crazy high. We'll probably trade sideways here for quite a bit. My guess, and it's just a guess, is that we will trade between this 1250 and probably 1450. I mean, at $200 range, I think you'll trade in for a while. Because if we look, we're going to pull this back to last year. The last earnings with the next earnings, this will be 1 year. Look at where everybody's holding. I mean, you're putting in a volume shelf here, down here, but everybody's holding down here at 800. So that's going to be a tough one to hold up. But Peter, I'm sitting in this one. This isn't one that I'm looking to trade. This is one, my initial purchase on AVGO. If it gets up to 1500, I think 1450 or so, I'll take a look because that will be a good gain on this one. But my initial purchase was on the 21st of March. I'm not trading it. I'd like to hold it until the 21st of next March. But because that trading range might provide some limited upside, I may take some short-term gains on it. I haven't decided yet, but if it goes down, I'm just adding to it. I'm not going to worry about my price per se. It's expensive. I mean, it is expensive, AVGO. And I think even in the PE is 23, the forward PE is 23. But I do think that We can go and we look at the summary here. I think it's a hold. Yeah, it's a hold in the quant. The valuation is where it's at. Yeah. But here, Monday, March 18th, said the upside is great. You know, this one says sell Friday, March 8th. Yeah. I think it's still good. We are not done 3 days, but my MU is down a couple percent, which suggests starting a position. Pavan, again, this is just a guess, but in my mind, I think you come back and you fill this gap a little bit. If we just go to a weekly, because we have had this stock price before. Now you have to hold, what is it? 96. You should be able to hold that 96. If we pull this back here to the time in 2022, maybe we want to go back to November 2021. I'll go back here because this was, this is the chart that I posted as, hey, there's significant pricing up here. So look, do I see anything jutting out here between 100 and 108? No. But, if you hold next week, if you start above this $98, $100, and that candle holds above there, then I would say start your position because we're going to 150. Because remember, this one, if you go back to a monthly, and you go back to, we may have to go to yearly. No. Here, 2000. This is just getting back to where it traded in 2000. So you're getting to all-time highs. Well-run company. It looks good even on the MACD here. Looks a little bit overbought, but yeah. I'm not taking a trade in this one because I'd rather have SOXX or SOXL. I forget which. I may be in the levered one. Honest to God, I may be in the levered one. But it's in my parents' account. It's not in mine. Medical properties. That's a great trade, though. Algorithm got you out, Chris, with a 30% gain. No dividend in that time, but earnings came back. Yeah, that's called hope and pray. At some point during that time, I would hope somebody would get out. Okay. I am going to go do this. Paid newsletter subscribers, I may hop on this weekend because I feel bad. I got to see how I feel tomorrow. I think tomorrow's going to be a rainy day, so I may hop on and just kind of prepare stuff and take questions and talk about stuff. So keep an eye out for the email. It'll be on Zoom. I'll send it out. Okay. Take care, you guys. Bye.